Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 19th of February 2020, so yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts. We'll have a look at a few interesting setups right now, and of course a few instruments that we looked at this morning just to see how everything's playing around and getting along, of course. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so now then, let's quickly jump into, quickly show you our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis, and I believe you can find a lot of useful information here for yourselves, so feel free to visit us here on jfdbank.com and click on the research tab right here. Now then, let's jump into the charts. Now the first one I want to touch on here is the S&P 500. Now I looked at this one recently, and basically what I was telling you guys, to keep a close eye on a potential move lower, small maybe correction to the downside here. So yesterday the index did drift a little bit lower. It closed just fractionally in the red, but still remained above this area, the one that I was talking about, near the 3,348 zone. So looking at the cash index right now, we can see that the index is back to the 3,380 zone, so just slightly below this barrier, this key barrier near the 3,385, and we're keeping an eye on this one, because if we get a break above this 3,385, then yes, this would confirm a forthcoming higher high, and we could aim for much higher levels. So in terms of the downside, from the very short-term perspective, don't get me wrong, we need to see a drop below this 3,348 territory, because at the same time this would place the price below the 21 EMA here on the 4-hour chart, and we could see this one drifting further south. But again, the move south could still be limited near this medium-term upside support line taken from the low of the 3rd of October of last year. So again, this move lower could still be seen as a temporary correction before another leg of buying. So that's why for now, guys, we'll be very careful with the downside. For us to, let's say, get comfortable with the lower levels in the medium term, maybe then we would like to see a break of this upside line first, and then we could target lower areas. But again, let's keep it short and simple for now. All eyes are on the 3,385 zone. Like I said, looking at the cash index right now, we are very close to this barrier. If we get a pop above this would confirm a forthcoming higher high and a new all-time high as well. So something to keep an eye on. Gold. Now, I looked at this one this morning, and basically what I was telling you guys, to keep a close eye on this 1612, 1611 zone, and we had a perfect test of it. So this is what I was talking about this morning, that in a way, either it could correct first to the downside and then aim for the 1611, or actually it could test the 1611, 1612 area first and then drift lower. Either way, the aim was to test the 1611, 1612 zone. You can see that this is what happened today, and now the commodity is drifting a little bit lower. Even if it drifts further down but remains above the 1594 territory, still this could be seen as a nice, good, positive thing for gold here, for the bulls, and we could see this one drifting to the upside. Now, for those who are more on the cautious side, of course, you can just wait now this one until it pushes above the 1611 zone and then target higher areas. But as I said, for those who are more on the riskier side, keep your eyes on this key area of support. Potential support, of course, the 1594 zone, because in a way, if it drifts a little bit lower, tests this level, but fails to drive below this, then we could see a nice good reversal and a push higher, where maybe this time we could break the 1611, 1612 territory. Even if, let's say, this drops below the 1594, all this territory could still be somewhat in favor of the bulls, because we are still trading this would still mean that the price is still balancing above this this short-term upside support line taken from the low of the 12th of December. Because for us to examine deeper extensions to the downside, we would need to see a break of this upside line first, and maybe a drop below the 1578 zone in order just to get a little bit more comfortable with further declines. For now, the downside is slightly off the table unless it's a small little correction before another leg of buying, so keep your eyes on that one. WTI oil. Now, I've looked at this one recently as well, and basically we're waiting for a push above this 52.15 barrier. Now, it was flirting with it in the beginning of this week, but didn't quite really stay above it, and now you can see that this time we are seeing a much better push here to the upside, a break of this 100 EMA on the 4-hour chart. So the next level for us right now is, of course, this 200 EMA on the 4-hour chart near the 54 zone, but just slightly above that we do have the 54.35 level, which is the high of the 29th of January. So good potential target. For now, we will only target this area, just to keep it short and simple, as I said, because as you can see previously, yes, we did have a strong slide to the downside, but let's say if this is seen right now as a temporary correction, and let me just quickly find the Fibonacci on this one. There we go, finally. So if, for example, we class this as a temporary correction, so for now you can see that the commodity is drifting towards its 23.6% retracement, 23.6% level on the Fibonacci retracement. So again, slightly above that we do have that the 54.35 level that I talked about. That's roughly midway between the 23.6 and the 38.2% retracement. So something to keep an eye on, guys. For now, yes, we are aiming for slightly higher levels. We will aim for the 200 EMA, for the 54.35 level, and then we'll take it from there. In case this decides to get a hold up here near this 23.6, and that's, by the way, around the 53.18-20 zone, if it gets a hold up here and starts drifting back to the downside, now in a way we could probably scrap the idea of seeing maybe a larger correction to the upside, or should I say, shouldn't be using probably the word correction, but a larger move to the upside. If it struggles to push above this 23.6, then we may see a nice reversal here back to the downside, especially if it starts dropping below this the low of this week, the current low of this week, near the 50.87 zone. Then yep, this could place this could open the path again towards this lowest point of February near the 49.30 zone. Again, for now, we're leaning more towards the upside in the very short run, but we'll be very careful near these obstacles, the ones that I just mentioned. AUDCAD. Now, the Canadian dollar is one of the stronger ones today. Let me just confirm that very quickly. So yes, the Canadian dollar is the strongest one today, and you can see that and of course the Australian dollar is slightly on the lower side. So this is the effect that we're having here, and let me just quickly get rid of these lines here just to have a fresh start. So basically, the pair managed to break below this key area of support, which is the lowest point of January near the 0.8837 zone. It drifted lower and is currently balancing just fractionally below this. Now, of course, all this is not really looking good for the pair and for the bulls, but to be honest, we do have a slightly well, should I say, another area of potential support here, and that's around the, let me just quickly mark this one. There we go. So that's also, it got also tested the 0.8830 zone, which is the lowest point of October of last year. Now, in a way, what we would like to see is, of course, a nice, good, strong push below this October low, and then, yep, we could get comfortable with further declines. For now, we're careful. Of course, we're cautiously bearish, but let's see if this area of support doesn't hold. If it holds, then we could see the bulls coming back here and pushing the pair back up here a little bit. But if it fails to withhold this area of support here, then yes, we will aim for further declines, because this way the downside could be open here for the bears to kind of take advantage of, and yep, we could see AUDCAD sliding further. For now, the way you could keep an eye on this one is, of course, if you see a 4-hour candle closing below the 0.8830 zone, then, well, I mean, this could increase the pair's chances of drifting further south. For now, you can see that it continues to balance near this key area of support. Let's see if it breaks, or let's say if the pair moves further down. If it doesn't, then we could see the bulls stepping in here and potentially trying to lift the pair back up. The only problem, of course, with the upside, first is this downside resistance line taken from the high of the 1st of January, and of course some of these EMAs could be an obstacle as well. But again, for now, we're mainly going to focus on this downside line, and we'll see if the pair continues to respect it or not. GBPCAD, now the similar story here, but the Canadian dollar is on the stronger side. We did get, by the way, the Canadian CPI figures. Earlier in the day, we got the UK CPI figures, which also came back not bad, but the Canadian figures were seen, or well, came out good here, and in line with expectations. So we're seeing the Canadian dollar, everybody's jumping into Canadian dollar right now. GBPCAD is drifting lower, although the pound is not really the weakest one. Or actually, no, I do apologize. The GBP is the pound is slightly on the weaker side right now. The weakest one from the major 8 is the Japanese yen, but we'll get to that later on. But looking at this picture here, we can see that the pair broke below the 1.7181 zone. I talked about this one this morning, and this morning in my Traders Espresso, I was reviewing this one, and the pair was still balancing above this upside line. But what I was saying, that if we get a drop below, a good strong drop below this 1.7181 zone, then yep, further declines could be possible. The next target for us is, of course, this 1.7111 zone, which is the low of the 10th of February, and if that fails to withhold, this would confirm a forthcoming lower low, and well, further declines could be possible. For now, yes, we are aiming lower, but we want to see how it performs near this 1.7111. If it fails, if it fails to break below this, then we may see a bit of a correction here to the upside. But if it continues to drop below this, then, well, I mean, further declines could be possible. NZDUSD, now very quickly on this, also at a very interesting spot right now. So the pair is currently balancing near this low, near the current low of February, near the 0.6374, and in order to aim for lower levels, we would like to see a good break below this area first, before, like I said, we could consider deeper extensions to the downside, because on a break of this 0.6374, the pair would confirm a forthcoming lower low, and yep, we could see the pair drifting towards the lows that we saw here in November last year, and we could then even consider a potential test of the lowest point of November near the 0.6317. For now, all eyes are on this area, the current low of February near the 0.6374. We would like to see a nice, good, at least a 4-hour candle close below this barrier before considering further declines. Now, in terms of the upside here, it's, of course, in a similar way, like with the AUDCAD, it's also a little bit tricky here. Now we can draw a nice downside resistance line here, taken from the high of the 31st of December, but of course, in a way, if it starts rebounding here from the 0.6374 zone and pushes above the today's high near the 0.6411, then we could consider a large move to the upside here. But again, don't forget that we may get limited near this downside line. So in a way, any kind of pullback here could be seen as a temporary correction before another leg of selling. But again, from the very short-term perspective, keep your eyes on these two levels, guys. If we do get a drop below the 0.6374 and we do get a 4-hour candle close below that, then, well, I mean, we could consider further declines. In terms of the upside, from the very short-term perspective, we need to see a push above the 0.6411 before considering slightly higher levels here. USDJPY now exploding to the upside. Now this is what I talked about this morning. Initially, of course, our target was only around here near the 110.29, but as you can see, the pair continues to push higher, and it also reached one of our other targets here near the 110.67 zone. And let me just show you what that level was. Let me just go back into history here. So basically, that's the high of the 21st of May, guys. So this of course last year, and the pair, you can see now it's kind of overcoming this one. Let's see if it can stay above it. If it can, then yes, I mean, further acceleration to the upside is possible. But if it drops below it, and if let's say will stay below this area, below the 110.67, then, well, we could consider a potential correction here, of course. But we'll keep an eye on this 110.29 zone, because previously it was playing the role of resistance. Now it could take the role of support. So something like this could be possible. But again, as I said, we will consider this scenario if we get if we can see that the rate is getting a hold up near this 110.67 zone. If it stays below this, then yes, we will aim for such a scenario first. In terms of the downside here, the same level for us remains for now, the 109.65. Ideally, we would like to see a drop below this one before considering lower areas. But again, as I said, for now, the downside is slightly off the table unless it's a temporary correction. Euro dollar finally for this session. Euro dollar, as I was talking about this morning, basically continued saying the same thing, repeating probably the same thing throughout already like several videos. Basically, as long as it remains below this downside line, we will continue targeting the downside. So our level here that we are targeting is around the 1.0777. Now, I talked about this level this morning, so you can have a look at that video as well. But basically, for now, yes, this is the one that we're keeping an eye on, the 1.0777. And if it continues to drift further south, then let me just jump into a daily chart very quickly on this. So if it continues to drop below this 1.0777, then the next level for us to consider could be around here. And let me just zoom in here a little bit. So the next level could be the high of the 21st of April of 2017, and that's roughly around the 1.0738. Very good potential area of support. Or slightly below that, we do have the low of that day, or the low of the 21st of April of 2017, and that's the at 1.00682 zone. So again, guys, something to keep an eye on. For now, if of course it continues to drift lower, keep your eyes, of course, on this downside line, because as you can see, it is still kind of trading very close of this downside line. But for us to get excited about the upside, well, ideally, of course, we would like to see a push above the 1.0878 zone, which is the lowest point of 2019. But of course, if it pushes above this downside line and breaks above the 1.0826 zone, then, well, we could start considering higher levels. But still, as I said, for us to get a little bit more comfortable, we need to see a push above the 1.0878 zone, and only then we'll aim for slightly higher levels. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT. But for now, I hope you have a beautiful evening, and I'll see you later. Thank you very much, and bye-bye.